I'm buying individual companies that I truly believe in, and I see that they are the best in their sector, and they are outperforming and creating value in a way that nobody else is, right? And this is opening up the opportunity for companies, such companies, to actually be invested in, because all of a sudden, PE ratios are coming down, fundamentals are coming down, so you're getting really good opportunity.
The auto sector and the airplane sector are two sectors I'm not willing to invest in before Trump, but now that he increased tariffs for those sectors, I believe it's even more riskier. So personally, that's something I'm avoiding.
So if all of a sudden Trump sets up tariffs on different products, how do you trade that?
Yeah, absolutely. I mean, in the short term and even in the longer term, it protects US companies. It's not good for the US consumer. It's not good for inflation. It's not good for monetary easing. But if you cannot rely on monetary easing, you have to be friends with tariffs.
Ladies and gentlemen, we just received CPI data and it was ugly, higher than expected. The S&P 500 is expected to come down. US stocks are going to be hurt from this. Crypto is going to be hurting too. And the US dollar is likely to increase and yields are likely to increase as well. The market does not like this and is expecting cheap money quickly. Trump just stated that he wants interest rates to come down, but Trump seems to be all bark and no bite. So in this episode of Market Buzz, we're going to be talking about CPI, Jerome Powell, and the Trump effect. How can we take advantage of the Trump talk, and try to make money in our portfolios and adjust accordingly? Because this is a trader's market. It's not an investor's market. So everybody, welcome. I have Akim and Timothy, popular investors from eToro. I'm one myself. Check out the portfolios if you like. And yeah, this episode is sponsored by us. So hope you like it. But yes. So let's get started first, right? So CPI comes in higher than expected at 3%. What does that tell you guys, right?
To be honest, the data, I mean, it's hot as it can be, yeah? It's 0.5 months over month. On an annual basis, 0.5 is 6%. Inflation, of course, the next month are not going to be that hot, hopefully. But the 0.5% months over month, in the CPI, 0.4% in the core one, if you remove energy and food, it's just too high. The markets need 0.1, 0.2 to expect rate cuts. The labor market is strong. The US economy is strong. The consumer is strong, but inflation is hot. So there are not going to be any rate cuts in the foreseeable future. So it just makes sense that the risk assets, tech stocks, crypto, they will continue to have really strong headwinds in the next few months. But the story with the tariffs, where all the products are going to be 10 to 25% more expensive, this is not a good thing for inflation. So don't expect monetary easing in the next months. Maybe closer to the end of year. Maybe we're going to have an amazing Christmas rally. It's possible, and that's my base case. So that's how I position myself. It's a good time to accumulate, but don't expect to make a lot of returns in the next month. I think it's going to be very, very choppy, and we're going to move sideways for some time. That's how I see it, at least. I don't know if you guys.
What do you see?
How do you position yourself?
No, I agree partly. I agree partly for sure. It'll be interesting to see how Trump comes into the equation now, because this might be the first failure of his presidency, right? One of the promises he made was day one, prices will come down, and nothing has come down. Everything's starting to go higher. We're starting to see a spike in inflation, which is what hedge funds are freaking out about. That's the reason we might see markets down today, right? But Timothy, let me know what you think.
Yeah, I want to stay a bit positive because, like you said, I want to see what Trump is going to do. His measurement of his presidency will be the stock market. So how the stock market performs will be his legacy. So in my opinion, he will do anything he can to lower rates. I'm not sure how he's going to do it, but I'm sure he's full of surprises. So I want to keep the option Trump as something positive and not only negative because he induced tariffs, etc. Yeah. So that's what I think.
Those things take time, in my opinion. For now, everything that Trump has announced is inflationary. There's nothing deflationary so far in Trump's policies, tax cuts, tariffs. So it's a little hard for now to see any hope for inflation to come down. And we're a bit in an interesting scenario where the whole world is easing, right? There's a lot of liquidity now in Europe and in Asia, and in the US, we're still tightening, right? So maybe there's some opportunities here, ex-US possible, something to consider.
Well, a lot of people are calling for Europe to pick up the pace, but I do find that the biggest issue that I have, it's usually like, and it comes back to this saying where when the US coughs, the rest of the world catches a cold, right? Because everything goes to the States. So I find it tricky that potentially we could see Europe picking it back up, the UK picking it back up, even Japan. I was actually looking at some of the data, and we were expecting Japan to present some results tonight at 12 p.m. And PPI is expected to come up 4%, which usually Japan and inflation do not mix. Like Japan has been almost in a deflationary state for so long, right? So this brings in the carry trade. This brings in the inflationary fears. It brings in a lot of catalysts that we've had in the back, and we just put in the back burner because they were not there. So the sentiment is starting to shift, and there's been a reason why we are in this sort of range in the markets right now, which is scary, So Trump definitely has a job, like a hard job in front of him. Hopefully he manages to figure it out, but with the way that he's been trying to play it, like America first and everybody can support me, otherwise you can go burn in hell, does not work, right? Like it shows weakness more than anything else. It shows I'm scared of the rest of the world, therefore I'm not going to work with you guys because I want to be the best. It's tantrum politics. It's outrageous. So far, this is something that's gonna tell me.
Where I agree with Timothy is that there is reason to keep some optimism. It's just this optimism is delayed. Don't expect to make returns in the next few months. It will take a bit longer, but see it as a fantastic time to continue accumulating because we have the most pro-corporation and the most pro-crypto president and administration ever, right, in the history of the US. We have really a strong base here to as Timothy said, for Trump to leave the stock market much higher at the end of his term than at the beginning. Just it's going to take a lot longer. It's not going to start, I think, this month or even next month. And we've seen this. The markets are incredibly resilient despite this geopolitical circus and the inflation headwinds. We're down not even 1% in the pre-market. Let's see once the market opens. But since the beginning of the year, everyone has been buying the dips. We've been buying the dips every time the S&P dropped below the 6K. They bought the dips and went again above the 6K. And I think that is the narrative at the moment is buy the dip.
No, I agree with you for sure. I mean, it's going to be buy the dip, but it's like be selective in what you're buying. You know what I mean? Like that would just be my 2 cents on it, Because with Trump, you never know if he's all of a sudden going to go in and be like, hey, you just bought? How about I set up some tariffs on chips? And all of a sudden it's like, okay, so my margins are dropping, and all of a sudden we don't know. So it seems like right now the market is playing, and I want to touch on this a little bit and I want to get your ideas on how you're potentially looking at this.
Tariffs.
So what is the Trump?
Chips?
How do you deal with Trump, right? So how?
Sorry, I was just saying tariffs on chips. Tariffs on chips is not bad for chips. We saw tariffs on steel. All the steel makers went up like crazy, right? The U.S. steel makers. And if you have tariffs
for American
on chips,
steel, for American steel, for sure.
Exactly. And it's the same for chips. If there are tariffs on chips, it's good for NVIDIA.
Hopefully. But let me ask you this. So this is the way that I want to sort of like continue to think. So if we're looking at sort of the micro, right? So when Trump says, because that's an interesting perspective, Akim, right? So if all of a sudden Trump sets up tariffs on different products, right? How do you trade that? Because it shows, at least with steel, that you are getting protectionism for American companies, which in the short term should benefit them because it makes them more competitive.
Yeah, absolutely. I mean, in the short term and even in the longer term, it protects U.S. companies. It's not good for the U.S. consumer. It's not good for inflation. It's not good for monetary easing. But if it's not going to be, if you cannot rely on monetary easing, you have to be friends with tariffs. If you cannot be friends with Powell, right? If Powell doesn't want to be your friend, you have to be friends with tariffs. So you need to think as an investor, if you're a short-term or medium-term investor at least, even if you're a longer term investor, you need to think about having a portion of your portfolio allocated to assets that are not going, that are actually going to continue going up, despite Trump's tariffs and despite his policy of us against everyone in the world. So, for example, in my portfolio, I have First Solar. It's a solar stock. Intuitively, it's not the stock you would choose, right? Because Trump, he doesn't believe in climate change and in renewable energy. But the fact is, the US has been using more and more renewable energy, and his tariffs are going to favor US manufacturers of solar panels. So this is good for First Solar, but also for steel makers. So you need to think about all these sectors that may benefit from Trump. And we saw it since the beginning of this year. I've never seen the Dow so strong. You know, the Dow index, it's the one with the US manufacturers concentrated. The Dow is really strong and very resilient and has outperformed the S&P and the Nasdaq in many trading sessions. And I think you need to think a little bit to allocate a portion of your portfolio in this Trump term where he will want to leave a legacy in US manufacturing, some US manufacturing stocks. So I have Boeing, I have First Solar, and you need, I think, to allocate a portion of your portfolio there.
Yeah, I hold First Solar too. I like it. If the solar industry is at the bottom of where, like, at least my expectation is, like 160 seems a really good price. But yeah. Timothy, what do you see? What do you see about Trump? How can you benefit from the Trump bravado? You know what I mean?
Yeah. So if we look at his past presidency, stocks that went up a lot were also the military stocks. And I haven't seen any military stocks right now pumping. So I'm watching stocks like Lockheed Martin. That's also a white mode company that will continue to make good money out of the US and even outside for growing their company. But these things, like Akim said, they can take time. So what he means by now is the time to accumulate, you don't have to buy the things that already went up 20%, 30%. You have to look for those companies that will likely to go up whenever Trump, he tweets one thing and you know he's gonna shut up 10%. So when he suddenly tweets something about China or going to war, you'll see LMT, Lockheed Martin, fly higher than Tesla's rocket ships. So definitely look for those companies. Myself, I'm more into tech. What I love about tech is, yeah, they have high margins. They can just scale over the whole world. Tariffs, it won't impact them too much, in my opinion. They don't sell goods. You mean software? It's something you can just sell to people on a monthly basis. I like these companies. So companies that are with a wide moat and can scale over the whole world will continue to do well. So these are the companies that in my portfolio are recession proof. They won't lose money if for example there is a recession and the public doesn't have money to keep buying. So in my portfolio, I have checked, and most of them are well established companies that don't really have issues with those new tariffs. Maybe Nike, because it's a lot of manufacturing in China, and also a bit of Apple, because they get a lot of their products from China. But besides that, I think my portfolio is pretty solid against it.
Something interesting that I heard in the popular investor meet that we had yesterday. This was a crazy statistic, and it's like for every 10% the US dollar goes up, it affects S&P earnings by 3%. Or am I reading it the wrong way around? I wrote this down. Give me a second. So yeah, so 10% up in the US dollar means a 3% decline in S&P 500 earnings because of the international exposure that they hold. So that's something super interesting to pay attention to, because the US dollar might become a really good trade. You know, it's like just holding US dollars for now, like the dollar continues to get strong. And if we're not getting any cuts while the rest of the world is cutting, might actually really be a really good trade.
This is the major headwind, in my opinion, for stocks and cryptos to go up, is when you have the US dollar paying for something interest in your bank account, while the euro and the other currencies, they pay almost nothing. It's very hard to convince investors to sell their dollars. and to go and look for returns in cryptos or stocks. In 2021, during COVID time, the dollar was extremely cheap. It was paying zero interest, right? It was zero interest time. So investors were like, okay, where can I make money? And the answer was the riskier the asset, the more money you make, right? But now it's not the case anymore. The safer the asset, the more money you make. And this is a little bit, it's a bit of a paradox, and this paradox will continue. And so as Timothy said, and as you also said, Nestor, continue accumulating, but be selective. Don't go all in something super risky, even though at the moment, the lower the risk, the higher the return. But I think this relationship, this abnormal relationship will change when inflation comes down and monetary easing takes place, because in my opinion, inflation will come down. We have real long-term tailwinds for inflation to come down. And the main one is called productivity with AI. We haven't mentioned AI. We on this episode now, we're talking since 15 minutes. We didn't use the word AI.
18 minutes
18
without
minutes.
saying. It's tell you what's happening to sentiment, though. You know, that tells you what's happening to sentiment. It's like you got to broaden out your your field of view now, because if you don't, you end up making the mistake of being like, oh, the thing that has been paying 40% year on year for the last 3 years is not actually giving me that anymore. So it's like, you know, what are we expecting, right? S&P 500 is expected to give you 8% to 10%, including dividends given out, right? And we like for the last 2 years, we've been what, at 20% and higher? You know what I mean? So the reality has to set in at some point where it's like, we need to normalize the earnings. We need to normalize the returns we're getting in the indexes. And this might be the time that we just hold steady for the next subside.
Okay.
So something to take into consideration too, because many people are used to, you know, many investors that have just jumped into the markets are expecting, oh yeah, 20% on the stock market is normal and there's no risk, you know. But the higher the upside, the higher the volatility expected in the asset class. Like Nvidia did lose $600 billion worth of market cap. You got to be able to stomach that in order to get those returns. That is the reality of investing, the reality of risk. It doesn't come without it. You know what I mean? The downside potential that you see in the asset class.
We've seen a perfect relationship between stock market returns and the treasury yields. When the treasury yield goes up, the stock market returns go down, right? And now the treasury yields just keep going up and up because the US is expected to need to borrow more and more money. So as long as we don't see a reversal of the treasury yield trend, the market will stay choppy. That's also something to keep on the radar, is the treasury yields. It's not sustainable, a treasury yield at 5% for the stock market to continue going up.
The thing is like, if we look at it historically, the interests are not even crazy high, right? Like at 5% returns, like in the past 10 years, sure, it's extremely high for the past 10 years. But if we look at the last 100 years, we're still under the average. So that's where potentially is like the companies that I see getting hurt in this are the companies that, like the small caps, right? Like the longer we stay higher, the less these companies can make a return. Their returns are going to be, they're usually in the negatives. So they're going to be even more negative because they got to pay higher interest on debt that they have to continue to use in order to run. But the big tech companies, funnily enough, have a ton of cash in hand. Like right now, I think you make less money letting Apple borrow money than the US government.
So Nestor, what
like,
you're saying is with the high treasury yields, you should go and buy the Max 7 and stick with them. I mean, the Max 7 were the main driver of the returns in the last 2 years. So you expect that to continue.
I'm expecting them to survive in the worst case scenarios, right? Like, and then I'm expecting very few companies in particular sectors to benefit from the current situation. So be very selective. I'm not buying the IWM. I'm buying individual companies that I truly believe in. And I see that they are the best in their sector and they are outperforming and creating value in a way that nobody else is, right? So, you know, like I'm definitely keeping a very close eye. And this is opening up the opportunity for companies, such companies, to actually be invested in, because all of a sudden PE ratios are coming down, fundamentals are coming down. So you're getting really good opportunities. This might actually open up the opportunity for investing in Europe, for investing in China, right? Alibaba with the DeepSeek advancements is starting to look more and more appealing, right? So we have those companies which in reality are like starting to open up the somebody knocked. So these companies are starting to open up pathways in order to, okay, let's start diversifying the capital, maybe start looking outside of America now that these companies are potentially likely to dip even more, and then find those opportunities, right? So analysis is going to become extremely important. Trump is going to make you work.
Do I have time to ask 2 questions? I just need a quick answer from you. Yeah. So which stock sector or which sector in general in the market would you buy now? Timothy, you mentioned defense, but
Yeah, I've said it before. Healthcare. No, healthcare is the one I'm buying the most right now.
healthcare, could you tell us a few words?
Very undervalued compared to the. Yeah, it's very undervalued to the stock market in the last 2 years, and when it reaches this point, usually in the upcoming 2 years, it will start to outperform the S&P. It's just based on statistics. So I'm now accumulating more healthcare sectors stocks to benefit from this reverse, actually.
So it's a statistical trade, call it this way. Nestor?
Right now, I
buy.
like chips. You know what I mean? I like chips. You know what I mean? This year, like I like chips, and then I'm slowly trying to find the best AI play. In all honesty, that's what most of my time is being spent on, because I do think that the software plays are going to be an interesting one for 2025, 2026, but it's going to be like the .com bubble, where it's like a lot of companies, just because they say AI and it's like, we are using AI, and it's like they're using a chatbot to like talk about in their emails, and that's the AI uses. So you have to really dig deep and see, okay, like what software is actually creating the most benefit. How can I take advantage of this? Like, and then how does it fall within the big sector? So companies like right now, I want to say, like, you know, it's like I still don't have those software companies where I can just be like, okay, like these are the companies that I would implement in my company. So it's like, it's difficult. But then chips are going to benefit. I think the AI revolution is not going anywhere. I think that, but again, it's time to start looking at which chips are actually going to benefit. So we're talking about, are we going ASICs or are we going GPUs, right? Is NVIDIA or Broadcom going to be the beneficiaries in here, right? Who's going to be the winner out of this? What's the way that we're implementing all of this technology into the data centers? Data centers are going to be massive because you're going to have companies have to compete for this. So I'm definitely paying attention to chips right now. It's where I'm at. Like I'm right now in an SMCI trade because there was value there. I don't know how long I'm going to hold it for. The NVIDIA trade that's coming, I think earnings are going to blow it out of the water. SMCI just told us that they're expecting to grow almost 60% year on year. NVIDIA continues its massive growth and massive numbers, right? So I'm definitely paying a lot of attention on those. And then I'm hoping that sector continues. But it's innovation, you know, it's right now the race is who's going to be there first and who's going to acquire all of the customers in order to make them reliable on that. Now I want to hear yours, Akim, you know, what sector?
Mine, it's very easy actually, and it's not a specific sector. It's literally anything that has a stamp made in USA. So it can be a crypto.
Okay.
It can be a crypto from a US crypto firm. It can be a US defense stock. It can be US anything, literally, but just made in USA. And I think you have real headwinds there for anything made in USA. So I think this will outperform with the super pro corporation administration that the US has. Europe, unfortunately, we cannot say they have a very pro corporation administration. We have a lot of bureaucracy, and I think it's not where the innovation will come from. China, the Communist Party doesn't like when corporations get too big or when certain companies grow too quickly or get too innovative. But not just that, also you don't have reliable information available. So we saw the saga with the DeepSeek that shaked the markets and shaked NVIDIA and all the US stocks. But the fact is that we don't know whether it's true or not that DeepSeek doesn't need as many NVIDIA chips. Apparently, they need a lot more chips than what they said at first. So for me, anything made in Europe,
I've got some data that's going to blow your socks off on that. You know, like that's an episode of its own. The DeepSeek saga with NVIDIA and the reality of the chip mania that is happening in China. It just tells me that people want to buy chips at no matter the price.
I think anything made in USA is the theme. So I had a second question, if we still have time. We mentioned the winners. What are your losers? The ones that you're absolutely avoiding and don't want to touch in your portfolio. Maybe we can start with Nestor this time. It's hard, huh?
Timothy, do you have an answer? Because I gotta give it a thought.
For me,
Because I'm willing
Nobo
to
is
touch anything at the right price.
absolutely the auto sector and the airplane sector are two sectors I'm not willing to invest in. It's already something I won't be investing in before Trump, but now that he increased tariffs for those sectors, I believe it's even more riskier, even more cyclical. So personally, that's something I'm avoiding.
You stole my answer, Timothy. And my answer was almost that. I would have said
It's a good one. It's a really good one.
really, I would have said avoid anything that is capital intensive. So that requires a lot of capital, because capital is very expensive currently compared to the rates we had in the last 10 years. So this will take time for companies to adapt, but also for airlines, especially for airlines, commercial airlines. You have a second challenge. It's more than a challenge. It's a big problem. It's the cost of fuel. You have the debt is costly, and they have supply chain disruptions, and the cost of fuel is high, and people don't want to spend as much to fly. They don't want to spend thousands for flight ticket. So there is a lot of airlines already mentioned it in their earnings releases. People are not so willing anymore to spend more on flight tickets, and they're looking for alternative ways to travel. And that actually benefits Airbnb and the cruise stocks. There's a reason why the cruising stocks are booming. It's because people are like, look, $300, I have an all-inclusive 1 week in the Caribbean going from Florida. But if I want to fly to Italy from the US, it's going to cost me $2,000. No, I'm going to the Caribbean for $300 for a nice week. And this is the reality now, is be very careful with capital intensive stocks and the ones that suffer very quickly from high inflation. What about you, Nestor? Hey, you cannot use our ideas.
Okay, Akim. So what I'm hearing from you, Akim, is that the market bus is gonna be going to a cruise this year. This is the news. You heard it here first.
We will go all together, and hopefully the
Nice.
We're doing a live on the cruise.
Hopefully the summit will be on a cruise this year.
Yes, Yanni, get him to approve.
Nestor, you losers. You cannot avoid the question. I want to hear your losers. I know you are
okay. I gotta do it. And the thing is just like,
I know you think that you can make money everywhere, but you have. The
thing is just like, you can make, like, I'm never. So yeah, so I can like, I'm not against any trade. You know what I mean? That's the beauty of it right now, right? Like even SMCI, I wanted to short it.
I
now
knew
I'm
you were
buying
going
it long,
to say
right?
it.
So it's like, but things that I'm staying away from, I'm paying attention, and I'm taking. So I agree with the car sector, just because of the debt crisis in America. It's something that's very pungent in that sector. But I would say like international oil would be the thing that I'm like getting a little bit scared on, and it's because of we are seeing a slowdown. Like I'm talking about like the Shells, the BPs, right? Like we're talking about oil in this case,
Those
right?
are
Like
amazing
drill,
companies.
baby, drill. Yeah, but what we're seeing with and the thing is like I'm thinking long term, right? Like I'm thinking in the long term aspect of it. The thing is just like we haven't seen any major moves on them. You know what I mean? It's like, yeah, they're solid, they're steady, but I think that they might get hurt if we see a slowdown and we see some sort of separation from America, right? And all of a sudden we go into this peace world that Trump wants, right? Where it's like oil is just going to be abundant. And then all of a sudden, drill, baby, drill, right? In the next 4 years, hopefully, like I think the whole sector is a little bit skeptic in investing more in oil, but I think oil might actually get hurt in the next couple of years. You know, the more oil supply, and if demand doesn't continue to go up, and I don't think we will see demand continue to go up because we're looking for alternative energy. I could be wrong. Again, like the thing is like you give it to me at the right price, I'm willing. But I think I'm heavily invested in Shell. That being said, I'm heavily invested in Shell. You know, current prices, would I buy more? No, right? I would stay away from it. I would look at other places in order to make money. I would even look at banks,
Nestor,
like financials, right?
Not selling is buying. So you are buying Shell today.
But that's the thing. I'm considering. the problem I have with it is that the capital gains that I would have to pay on that position are massive, and I don't want to. Yeah, I don't want to pay the capital gains. I don't want to pay the capital gains. So that's why I'm holding. It's like, because I don't think they're going to drop that much, but I don't think they're going to move either, right? So it's like, it's a balance, right? Again, I just think like if I have to say no to a sector, you know what I mean? And potentially like just to add something. But the thing is like if oil drops and we see oil starting to come down, and all of a sudden the economy start getting better, like I'm willing to change my mind that quick. Like if the fundamentals change, I'm willing to change it.
Nestor, if I may, respectfully, and you can cut this part of our discussion, but you actually completely contradict yourself. If you take the winner, your winner, and your loser, it just doesn't go together, because your winner, you said, is AI infrastructure, and AI needs so much energy, a huge amount of energy. So all the oil that you will drill,
but I don't think the energy is coming. I don't think the energy is going to come from oil. I don't think the energy is going to come from oil. It
takes time to transition away from oil. So you cannot say that oil is going to be the loser this year.
I agree.
If you believe in AI.
Akim,
do you see oil demand increasing this year?
I absolutely see oil demand
We're talking about this year.
I absolutely see it increasing this year. The US economy is strong. India is growing like crazy. And India is relying on oil. They don't believe in solar panels or whatever. They tell me one big economy that is shrinking and that is consuming less oil. Even Europe needs more oil and more LNG.
Yeah. The thing is like, look, like right now, if I have to put money on it, I said oil doesn't move this year. I say oil doesn't move. If I have to put money on it now. But that's like, how can I say this? Like, it's based on very little research, very little analysis, is to give you an answer more than anything else, right? So that's the issue. But I mean, like, do I see other companies doing better? 100%. But would I buy, for example, on my eToro portfolio, would I buy oil? I don't think oil right now, it's like, even potentially nuclear, if we get the right advances.
Nuclear is too late now. It went up like
solar,
crazy.
I think solar benefits from the AI revolution too.
Yeah, definitely.
You know what the problem is with oil? The thing is just oil, like I think, and I might be wrong on this, so don't quote me even though this is going live. The problem that I have with oil is that the current infrastructure of energy, it's such a slow moving thing, right? As such a slow moving industry, you're not gonna get that boost in order to be able to say, okay, like let's start the generators back up. No, you usually are going to need energy where the data centers are going to be. So we're thinking nuclear, like small generators probably is going to be the thing that wins. Solar to like create a baseline somewhere. But the thing is just like we run into the same issues that AI is running, which is that there's too much demand, not enough supply. And I just think that the American energy infrastructure is not strong enough to actually just increase the demand of oil in that way. But I could be wrong. Like I would invest in oil if prices come down. But right now, Shell sitting at 32, 33, which is like my barometer for the industry,
Makes total sense.
And Akim, I had one question for you, if there's time. Yeah, Ethereum is made in America, so that means it must go up this year.
It's made in Canada.
That's why Akim is a crypto junkie now.
The founder is a Canadian.
It's not the US.
Canada is not American yet. Oh, but Ethereum, I have high conviction in Ethereum, jokes aside. And a lot of US investment firms use it, and Trump is invested in Ethereum. It's at an accumulation phase at the moment. In my opinion, it's worth continuing to buy ETH. And once we have rate cuts back in the horizon, we saw the amazing rally we had at the end of last year. That's because Powell said, yeah, we're going to cut rates and inflation's coming down. And we had the rate cuts in the horizon. So markets were expecting rate cuts. You don't need to actually see rate cuts. They just need to come back into the picture. Now they left the picture, right? Crypto is resilient, in my opinion. ETH is at the crucial support, is holding. ETC is also super resilient, is at 90K. But the rate cuts need to come back into the picture as a possibility in the next months, right? So, and I expect the rate cuts to come back maybe in summer. As soon as inflation is going down again, or labor market starts weakening or the economy starts weakening. You don't even need inflation to go down. Inflation at 3% is fine. Actually, at current level is great if you start seeing the economy getting a bit weak and the labor market getting a bit weak. So in my opinion, it's a good accumulation phase at the moment for ETH and for BTC. And I know, Timothy, you also invested in crypto. You also believe in the case here.
Yeah, but I don't monitor the rates to buy crypto. I just look at the chart, and most of the crypto charts I'm in are really good. But then you look at altcoins like DOT or AVAX, and I mean, they're done tremendously against Bitcoin. And those are not the coins you want to be holding. And to be fair, if one of my coins starts to underperform Bitcoin again or even Solana, I will cut loss and just move on to the stronger ones. So like Nestor said in the beginning, this is a trader's market. And especially for altcoins, I don't think it's working out to just buy and hold. I mean, why are you holding fundamentals? But there's 10K coins launching every day. So why isn't the coin neighbor launching or going up 20x? Why should your coin go up? So you have to listen to what the market has to say and then buy into that trend, actually.
Yeah, I think right now taking profits when something rallies like crazy, like moves like Intel, moves like SMCI, moves like somewhere in Bitcoin where we could get 110K again or something. Moves like that, you want to sell a little bit of your position and have some cash ready to deploy because there's going to be opportunities to get in and out. Like, if you get anything out of this, I think that's my take at least on, But yeah. Cool. I think we touched on anything, guys. That's everything. Anything else you want to add? Akim.
No, I think interestingly, we're all a bit on the same page. I think we now just need to continue being selective and buying good stocks. So I think we're not going to have a fantastic February or even a fantastic March month in terms of stock or crypto returns. But I think it's good. You have to keep buying the dips of the assets you believe in, and better times will come. We're absolutely not in a bear market. We're in a bull market. We're still in the bull market, but we're really in the accumulation phase, in my opinion, of the next leg up. But then for next year or in 2 years, that's another story. I can see a bear market coming. This is the topic for another episode. Still in an uptrend overall.
Yeah, if you look at the long-term charts, Bitcoin and S&P, I don't understand why people are so fearful or why they say the market is bad when it has been going up since 2022, So it's been
Bitcoin
tremendous.
is at 90K. Bitcoin is at 90K. Nvidia is sitting at 130. It's like, yeah, it's not the 150 we were at. We're cooling off, but it's like, it's like, are we in a bear market sitting at all-time highs? The S&P 500 is sitting at all-time highs or close to all-time highs. The Nasdaq is sitting close to all-time highs. What are we talking about here? You know what I mean? Like, it's just.
Do you see my screen? I have here the Bitcoin chart. Are you guys seeing it?
Correct. Yeah.
We have a tiny dip here, tiny one, and everyone is losing their minds. Yeah, tiny one, right? But if you zoom out, it's just amazing.
You know why? Everyone is in altcoins. That's why. Akim, that's the reason why everyone is so sad.
Even if you
it's because everyone is holding altcoins.
Even if you go in altcoins, I think ETH is a good representation. You can see that we're completely in an uptrend still. Yes, we're going to test this support line that you can see here, right? Every time it dips, it hits this support line. And we're at the support line, and I think we're at the perfect phase to continue buying altcoins. But of course, it needs to be within a diversified portfolio, in my opinion, and you'll be fine. And the same is with NVIDIA. If I show you the NVIDIA chart, if I show you the Apple chart, if I show you Tesla chart,
they're all the same.
They're all the same. They were up crazily since Trump's election, but in the last few weeks, yes, there's been dips and dips, but keep buying the dips, in my opinion.
Many people think, many people like to think that the presidency is just like, I'm able to just change the whole world with a click of a finger. And the reality is not even Trump can, right? I think this shows as the CPI data today shows as Trump's first failure, or maybe the second one after he couldn't get the tariffs out of China. But maybe that's what he wanted all along.
But
So,
look,
but the
Trump
CPI, I
started
think, is going to hurt him because it was one of the promises.
January 20th, right? January 20. The CPI data is for the whole month of January. And I don't think whatever Trump did since January 20 had any impact at all on the CPI. I think the reason is not Trump's policies, but it's because, I mean, there's a bunch of different reasons, but I think it's because a lot of companies and a lot of people were buying like crazy stuff that they were afraid were going to be hit by tariffs. And that's why inflation went up. Because suddenly steel got more expensive. A lot of things got more expensive ahead of the tariffs, ahead of the news. So when the tariffs come into force, I think you're not going to see that much impact anymore at the time it comes into force. Because now the companies are already pricing in the 10 to 25% tariffs. And I think this is what we saw in January, because since November, we knew that she was going to put tariffs in place. But also beginning of the year is usually when a lot of employees get promoted and receive more money from the companies and their bonus is paid out, consumption is higher. So there's a seasonal factor why inflation is hot. I personally never believed in 0.2 or 0.3 CPI. 0.5 is also higher than I thought. I personally thought it would be 0.4. But in my opinion, inflation will come down with time despite tariffs, because one single president, I don't think has that much of an impact. Anyway, yeah, that's
for sure.